G'day traders, mindset reset, free cash Friday, nail and bail type of day. We'll explain that. A few traders ask me what I mean by that. Today we're talking about the two types of trade setups. Repetition, repetition, repetition. I keep repeating some concepts over and over again, and I want to really reinforce the simplicity of everything. Pump and dumps and dump and pumps. Those are the only two trade setups. So we have our big picture. We talked about this opening range, initial balance. That gives us our thesis for our day count, breakout traders in the market, trap volume, high of week, low of week, day 1, day 2, day 3, Monday, Tuesday, Wednesday, Thursday, Friday. This week is a little bit sort of different week. We had a lot of major red news. We had the Fed on Wednesday. We had parabolic moves on Thursday, which were day 3s in 3-day setups. So remember, there's a 5-day template, Monday to Friday. That's a weekly template where we talk about the basic template is a dump and a pump and a dump. Then we also have 3-day setups, which we saw on gold. Tuesday made a slightly higher high that broke Monday's opening range, but reversed, and we already had day 1 shorts in the market inside of Friday's first red day. Tuesday broke out of Monday's low, pulled back up 3 levels, dropped down, and broke down in Asia on Thursday morning for the big explosive low of month, low of week, low of day, low of session parabolic short squeeze, a 3-day 5-star scalable opportunity, which was a massive day for several traders. That was only one instrument. There were several instruments that had huge days. The indexes all went parabolic. Dump and pump, or pump and dump. So again, traders are saying, oh, but it was a first red day. Oh, but it was a first green day. So let's go back and revisit that concept. If it's a dump template, Monday, Tuesday, Wednesday, or Monday, Tuesday, inside bar, Thursday, that sort of thing. If it's a dump and a pump template, we're looking for first green day after the dump down low in the week. It can happen on a Tuesday. Friday could start the dump. Monday could bring it down, put our opening range. Tuesday gives us our initial bounce on a first green day for the parabolic move back to the high of the week. Same thing with a dump on a first red day. So I want to reinforce, traders are calling every bull candle day and bear candle day a first red day or a first green day. Remember what we're looking for. A dump and a pump template will have a first green day that coils down low for an explosive move back to the high of the week. We're not looking to buy at the high of the week. We're not looking to sell at the low of the week. We want to have a dump and pump scenario into the end of our week, Thursday, Friday, for the vertical parabolic move on Free Cash Friday. We had parabolic moves on Thursday after the Fed. So our templates are a little distended out. We've got the Japanese yen. The Bank of Japan has been intervening and driving the yen crosses, the yen pairs higher as they're intervening with the yen. So again, we're in day 3 breakouts and traders are going, I'm looking to short the high today. Don't look to short anything. Look for the setup. If they give you a dump in a very strongly trending market, even if it's day 3 breakouts, I'm going to buy the pump. We had a 3-session setup. They peak formation low in Asia, peak formation high in London on the pound yen that came down and went sideways and started a parabolic setup into the US session open. Exploded up 40 to not quite 50, went up to the quarter level before auctioning back. Moved my stop up to trap 25 because again, I was looking for that maybe to go out further, which it did later after the major red news, but I was looking just for that initial burst because it's Free Cash Friday. So nail and bail is this. When we have the type of day that we have markets that are distended. So gold in particular, we have our signal day. We had a large range day yesterday, but look where I drew the levels. I showed the levels of Monday's opening range high and the low of the day and the breakout of the Asian high. We had a 50 pip box. The template itself on the day is what's important. So we had a market that had pumped up. We had volume up high, and they gave us a death candle 15, 25 minutes into the first half hour. Consolidation up above 50 for the beginning of the dump. And that dump is, think of this, they pull the bids out. It defies logic, which is why traders need to get all the technical indicators off their charts. Because technical indicators on day trading do not help you when the markets are pump and dump and pump scenarios. They lift the offers and get the market up higher and get you buying up high, and then they pull the bids and drop the floor out, which is why it just keeps falling until the new hour starts and we're heading into the New York Open, which is why I said to you I'm taking some off. First, so it's just talking about position sizing. So if it's a scalp, a session scalp opportunity, and you're scalping with whatever percentage of size. So I talk about using 25 to 30% max size on scalps. And on a 5-star opportunity like yesterday, I'm going to go 100% max size. But I still scale in. And what that means is that I scale in usually in quarters, or I'll scale in thirds, so that I can pull some out right away when it makes its first drive, move the second pair to break even, leave the original position at the original stop, because that way, as it goes to the next level, as on gold, it hit 75, I took half off. So the first quarter's out right on the first drop down. The second half is off at 75, and I left a trailer, and if New York Open proceeded to drop through the low of the day. It didn't, it reversed, and it took me out because I had trailed my stop loss down above the double zeros. So that last position is the smallest amount left in the market, but it still takes me out with at least 50 to 60 pips. So regardless of how big you're trading, that's one way of doing things. You can add it in quarters, you can add it in thirds. I don't care if you're using one lot, one micro lot, whatever. If you're going to use micro lots, use 3 micro lots, but just practice the art of scaling in and scaling out. But I want to emphasize everything is a pump and a dump, or a dump and a pump. People say, can you explain that setup? It's a pump and a dump, or a dump and a pump. That's it. There's nothing else. So it's okay. Yesterday's the first green day, but they went up to the high of Monday. That's the opening range. That's the high of the week, and that's where the dump started. Death candle, 3 levels of rise. There's a 50 pip box. I drew that on the chart for the dump. Traders are making things too complicated. DJ30, death candle, coiled sideways for 15 minutes for a vertical blow off for 40 pips. I'm not there to hang around. It's already distended in day 3 breakouts. I'm not expecting it. It's the prelim U of M sediment. And why would that be a major mover? It probably isn't going to be a major mover, but I don't want to be in the market in case it wicks or does anything else. Non-farm payrolls, the Fed, retail sales maybe, CPI, PPI, those are going to be potentially high impact, high volatility news releases. Other stuff, it's red news on there. Oil inventories. I just want to make sure I'm not in the market when that comes out, just in case they, spike both sides and wipe people out. I'm not interested in putting myself at risk. How can you have size in the market at risk like that? You can't. You can't do that. So if you're sitting in news, if you're trading news, you can't possibly be realistic about trading size, because nobody with size is going to sit through a news release. That's ridiculous. Pump and dump, dump and pump. I have to keep emphasizing that because people keep messaging me and commenting, can you go through and do a video explaining that setup? I will go back through the templates, and then we'll walk through. But you need to understand there's only 2 types. You're either trying to sell the dump and then you get stopped out on the pump, or you're trying to buy the pump and you're getting stopped out on the dump, because it's a pump and dump setup, or a pump and dump setup, or a dump and pump setup, which is why I talk about not trying to buy the lows and sell the highs. So important. And I made that reference on the DJ30 as well. Large bear candle engulfment. In that initial first 15 minutes on the 1-minute chart, there's a vertical blow off through the low of the session. But that large 5-minute candle engulfment, the death candle, gave a 50% level after major red news for a perfect sell-off, which went over, I think, 100 pips. So think simple. Whether it's 3-day, okay, the weekly template, a 3-day template, 3-day, day 3 breakout. So some traders, this is what happens. They try to counter trend a day 3 breakout market. We're at the end of the week, and they walk away going, oh, this doesn't work, when there's no sell setup there or buy setup. But then they miss it on Monday or Tuesday, like we saw in the pound this week, when they give you the actual setup for a vertical move of 100 pips. So it's about the setup. The signal day, people, and I put this in the playbook, the signal day is there. And if people don't get that signal, the setup that day, they go, oh, it didn't work. And then they miss it the next day. And that happens a lot on first green day. It happens a lot on first green day. There's a first green day, the market will trigger a new high and pull back and close sideways, and they forget about it, and there's your day zero setup. Peak formation high, peak formation low, coiled market, and it explodes the next day, and they go, oh, I missed that. So you have to be on top of things, but at the end of the day, when everything boils down to the actual execution of a setup, it's pump and dump and pump. Whether it's 1 minute, 5 minute, 15 minute, hourly, 4 hour. So another quick question regarding the traders having all their different time frames up. You don't need to do that. If you understand the rotation of time, if you're working from the high and the low of the day. If you've broken a previous day's high or low, you have other time frame traders already in the markets. And if you're on a day that hasn't, you need to be aware of if you're already outside of a previous day's boundary in an existing breakout. People don't see that, and they don't realize they're already in an existing breakout and they're trading in a market that's already trapping volume or continuing to maybe move in the direction of the initial breakout. So very simple, but you have to step back and actually understand what you're doing, not just going, it's at down low, I'm going to buy it. We could be in a market that's trapping volume, like on the Swiss and the Canadian dollar. We had a lower high and volume trapped, but we don't know. That low of the day can end up being our trap volume level, neckline, for a measured move. Timings, levels, behavior of price. Pump and dump and pump. That's it. So don't try to counter trend a market where there's no setup. Or just because it's at a low or a high, don't counter trend it, because that's what's going to smash you. And again, remember, where can you put size on? A parabolic trade setup doesn't just go at a daily low and go boom all of a sudden. It needs to have a setup. Yesterday gold, perfect textbook example. That is the best trade setup on gold. But it all depends when we get that setup, 3 sessions outside of the boundary, how does price behave when we get into the timing window? We don't just blindly want to buy the low or sell the high, because we could get a market that collapses and goes vertical. And I've seen gold drop 500 pips in less than an hour, wiping out small funds, everything. Just went vertical, dropped a couple hundred pips, and then fell another 300 in about 5 seconds. Just spiked right down. So do not mess with gold. Don't counter trend it. You're trading setups. And that's why timing is so critical, especially with gold. But I'm going to just repeat this: pump and dump and pump. Pump and dump and pump. And that's it. So explaining setups, pump and dump and pump. That's as simple as I can make it, because that's all there is. Whether it's over the course of Monday to Friday, whether it's the course of a 3-day setup, whether it's the course of day 3 breakouts, and you're looking for a trade, but they give you a dump and a pump into an existing strongly broken out market. We don't have any break-in structure. We have no evidence of any, reversal on the longer time frames. But if they give you a pump and a dump like they did on the DJ30, that was an easy 40 pips before major red news. It went vertical, boom, straight down. Coiled market for an explosive move. Nail and bail. What that means in certain types of conditions, on the daily template, even in an extended market, Philly, U of M, whatever it is, the sentiment releases, it's major red news, but it's probably low impact. It's probably not going to change the market. Non-farm payrolls, yeah, we could see an explosive 75 pip candle in the first minute, or for a first bounce or something like that. So purpose is to protect our capital. We don't want to jump in front of major red news. Any major reports, I am not in the market, because I know that they're using that to either spike out existing profitable traders. So let's think of this. Who is in the money when the session starts? Well, longs were obviously in the money. Plus, they'd broken out of the previous day's high on gold. The longer I'm in that short trade and the time decay factor is ticking in, who's in the money now? Me. I am. So I'm the one who's going to get spiked out or wicked out if I hold on to that into the New York Open or into major red news. So I'm going to trail in that last portion. I'm taking money off and I'm trailing that last portion. 45 minutes. You got a lot of time to think. You've got a lot of time to think. Pump and dump, dump and pump. Pump and dump, dump and pump. Anyways, Free Cash Friday, nail and bell type of day, which means take the trade, take the cash. I don't have any elation about this is going 500 pips, whatever. I take the money and get out. It's all about timing, levels, and the behavior of price. Pump and dump and pump, lock and load, and get on with your day. Have a great day, traders. Free Cash Friday. Enjoy your day. 1% better every single day. And may the markets go with you.